What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today, my friends. Guys, today I want to do something a little bit different, and I really want to focus on the key elements that have made me a profitable trader and also the biggest mistakes that I see from new traders. And I really want to share this video from the bottom of my heart to try to help make you profitable. And I honestly believe if you follow these factors here, guys, it's going to give you an edge over time as long as you follow the principles and follow the game of math, because trading is a mathematical game at the end of the day. All right. So thank you for all the army members in here. And I want to get straight into it. Okay. All right, guys. So the first thing that I want to start off with today is the biggest mistakes. Because if you can avoid these biggest mistakes right here, then you have a higher chance to become profitable, a much higher chance to become profitable. The main issue, what happens is the deadly mistakes that new traders make that they cannot recover from. Okay. And I work with so many traders over the years, and these are the things that I consistently see. Okay. So the first thing is averaging down. Averaging down is a powerful thing to do. Okay. And it should be only used in the right situation, not for an emotional reason. So, what does averaging down? So, let's talk about averaging down. Okay. So, we can use this chart as an example. Okay. So, averaging down is so right here, guys, this is around 11:30 on futures. Okay. So, let's say here you wanted to short at 11:30. And because you heard somewhere in the news that the market was going to crash, or you have a feeling, and then right here at 11:30, it's now it becomes 12:30 and you're down. Okay. So let's say you use options, futures, whatever you use, doesn't matter. And then you short more. And then we go here, 150, you short more. And then eventually, guys, when we get up here, you get margin called, or you just can't take the pain anymore and you get out of your position, and then you end up losing a huge amount of money. Okay. And when you lose that huge amount of money, it's almost impossible as a new trader to recover because your capital is so limited. Hit me with a one if that makes sense. Okay. So the number one thing that I want to tell you today, guys, is do not average down. I've blown up accounts averaging down when I first started trading. Okay. And if you can avoid that rule, you will go a long way. All right. The second thing is position sizing. So this is very key. When I first started trading, I would take a short, let's say here, and I would trade my whole account. All right. I had like $5,000 or $3,000, and I would just put my whole account in. Especially when I first started trading, I was doing leverage ETFs. So I would just like say, okay, I'm going to short $3,000, or I'm going to go long $3,000. And what I did there is I just didn't have any control of my sizing. So some days I would win $1,000, and then some days I would lose $1,500, or some days I would win $200, and it was just all over the place. Okay. And from a sizing perspective, you want to risk max 5% of your capital. Okay. So that means if you have $1,000, you should only be risking $50 a trade. All right. $10,000, then $500 a trade. And this key right here, risking the maximum amount, is what we call your R unit. Okay. So you need to stop thinking about percentages and you think about R unit. So if I'm doing 500 a pop, okay, 500 a pop, 500 a trade. When I lose, I should be losing 500. When I win, depending on your risk to reward, it should be at least 500. Okay. Preferably between $1,000 plus. Okay. And that is the two main biggest mistakes that I see on any day, guys. You can have a great trader, a new trader. They love Fibonacci. They love trading. They're doing a great job. And on one bad day like this, they say, you know what? Everything is telling me to short, and I'm just going to fight this, and I'm going to short here, I'm going to short here, I'm going to short here, I'm going to short here. And then when they can't take the pain anymore, they exit for a huge loss, and they can never recover their capital. Or instead of risking 5% of their account here on the short, they risk 20%, or they risk 50% of their account, and then they blow up. Okay. So those are the biggest mistakes. No rules and no tracking. That's the next thing that I want to talk about. All right. So that's going to take me into the study notes. What is winning trading psychology? All right. So on tradingwars.com resources, I have 5 free day trading university lessons. And what I want you guys to follow along with me, one is the one on trading psychology. All right. So let's talk about this. So what I want to bring your attention to right here is this example. Okay. So this is one of our trading logs for April. All right. So this is trading a small account with MES futures. Okay. MES and sometimes ES if we can't get, if the MES is too much, we would get the ES. Okay. And this right here, guys, if I say, hey, my friend, you want to be a trader? Show me your June trading log. Show me your April trading log. Show me your results. How many of you can do that right now? Hit me with a 10 if yes, hit me with an 11 if no. And don't feel bad if that's not you and you're not tracking it. That's totally fine because everybody starts somewhere. All right. But if you don't have this level of detail in your log, you're not going to make money in the long run because you're not going to understand if you're actually making profit or not. You're going to trade day to day and get locked up in the emotions. Okay. So one day you're going to be up and you're going to be like, this system is amazing. Trading is such an easy thing. Then the next day you're going to hit a loser and you're going to say, oh, what happened? What went wrong? Did I do something different? Until you do this, you will never understand. So here's an example of one of the small accounts we trade in the Discord. And you can see here the leg. This is Fibonacci because I trade Fibonacci. Here's the symbol, my risk to reward. Okay, so I'm either losing -1 or making one or more. So in this particular situation, the risk unit is roughly $400. And with slippage, sometimes you'll lose a little bit more, sometimes you'll lose a little bit less because you have to size accordingly. So what I want you to see here is that -400. And then when we're going in the increasing, we're looking for 1190, 1100, 1116, 1200, so on and so forth. And then you can see here, guys, look at these losing streaks. 1, 2, 3, 4, 1, 2, 3, 4 losers in a row. 3, 4 winners in a row, then a loser, then a winner, then 2 losers, then a winner, then a huge losing streak here. Okay. And what I want to show you there, guys, is if you're not doing this, then you're just going to trade emotionally. And every single day, you're going to hop from system to system. Hit me with the 17 if that makes sense. All right. So this right here on the resource page, I have a downloadable copy. You can download and just print this out and write it down if you want. In the Discord, guys, if you're in here, all you go paid indicators and tools. And we have the Excel file that you can use right here, 100 trades journal. Okay. So, if you need it, guys, it's there. And look, if you really, really desperately need a journal and, you don't want to use this one, and you want the Excel version, just email me, rich@tradingwars.com, guys. I'll send it to you for free, whether you're a member or not, because it's that freaking important. Okay. You are a businessman or woman in this business of trading, trying to make profit. You need books and records, guys. I'm a CPA. Everything has to be debits and credits. All right. And we have to have logs. We have to understand. And I really want you guys to challenge you, my friends, to track your trades for at least a month and then see where you are. Okay. So no, these ones are not the automated trades. All right. Okay. So let's go back now to the lessons here. All right. So there's one very simple mathematical formula that must be in place in order for you to make profit. Okay. And that formula is your average winner must be greater than your average loser. So if we go back to this example here, the average winner is a little more than $1,100 based on this trading tracker here. And the average loser is between, 390 to 420. Okay. So that gives a rough risk to reward of 3-1. So when I talk to you guys, when you're trading, when you want to get better, I'm going to ask you, what's your numbers? What's your numbers, guys? What are you risking? What are you trying to make? What's your risk to reward? Hit me with a 22 if that makes sense. Okay. And then from there, you're going to go up to this table. Now, this table is going to tell you what's going on. So for example, if you say, hey, Rich, I'm a 2-1 player. All right. I'm trying to make double my money. So then I say, okay, with a 2-1, you only need a 34% win rate. Okay. Or if you say, hey, I'm a 3-1 player, then you only need a 26% win rate. If you're 4-1 and so on. And then the lower you go from a risk to reward, the higher the win rate. So new trader, guys, you want to be above 1 at the minimum. You want to be somewhere in here. And in some of my automated systems, I have a 6-1 risk to reward where I go for a 15% win rate. And on those systems, I don't hit often, but when I hit, guys, it's a big, big money roll. And I like doing that for my automated trades. And then when we day trade the Fibonacci, we try to use between, at least a 1.5 plus to get that. And I just wanted to show you guys some examples on the broker statement. So in theory, when you sit down, you're going to say, Rich, I want to risk $500, but look at the reality of trading. You're going to have commissions. These are commissions. Okay. And even when you sell, you're going to have commissions. So please, my friends, factor in the commissions in your trading. That's why I use Interactive Brokers, because I feel like they're fair with the commissions. Okay. If you're trying to do this with options, there's some brokers I used to trade like in a tax-free account back in the day, but the options, the commissions were like $10 a contract, $15 a contract, $20 a contract, and I could not actually even make money doing that. Okay. All right. So we talked about winner, loser, risk, reward, winning and losing streaks. So like I showed you guys here, you have to embrace that. You're going to lose. I can't stress this enough, guys. You will lose. If you're not losing, something's wrong. If you're not losing, it's probably because you're trading an inverted risk reward where you're trying to make 5 cents and risk $1. Don't get in the fear of, oh, I have to be green. I have to be green. No, you don't, guys. What you need to think about it is like this, my friends. At the end of the month, am I making money? That's the most important critical question. I want you to think in months. You have 12 months a year. You have 12 cycles. Just like a company running a business, look at your P&L on the monthly. The day-to-day will be the revenue and expenses, and you need to ignore the noise. Okay? The next thing is instruments. So just hit me with a 2 if that makes sense. Instruments is very critical. All right? So I have another guide here on the resources page. This one is about futures. And futures has really changed the game for me. And you don't have to trade futures, but what I would recommend when you're first starting off is to get off the options unless you're doing the Fibonacci 0 DTE strategy that we trade. Because if you're trading any type of breakout strategy with the options, you're already going to put yourself in a situation where you are getting in for a high premium, and that itself is going to set you behind. So instead of doing that, so for example, we go here to SPY. So you can see we had, a little bit of a breakout today, and we had our long entry was right around. Let me just pull up the long entry. So this is the long entry for today. Let's hop into the Discord and get the long entry from yesterday. Okay, so the long entry we had, this is an automated trade, is 434.27. Okay, so let me show you a few ways to trade this now. Okay, 434.27 right there, and double click, boom, boom. Okay, so we wanted to go long once we broke this level today. Okay, so now if we traded options on this, look at this. All right, this had already a huge move. Yes, you would have still made money on the options. You would have, but a good chunk of the time when the market has already accelerated up like this, then you're going to be paying a very strong premium for calls. So instead, we would like to wait for a pullback, right? So that's what we would like to do for the calls. However, if you're trading shares, ETF, or you're trading futures, it's just straight price. So if you buy at 434.27 and it goes up to 429, you still make money. Hit me with the 15 if that makes sense. And for me, the best mix between trading shares, because shares can be very expensive as well, and trading options with those Greeks is futures. I have the full guide. I've talked about this many times. I have everything in here, guys, for you for futures. So make sure you read this one. Take a look at this, okay? I'm not going to spend too much more time going through that. So sizing, and then, the last thing, and I left this for last, okay? Because it's not the most important thing. Too many people obsess with the strategy. It's not about the strategy, okay? The strategy, it doesn't matter, because every strategy can win over the long run if you have proper risk to reward and proper win rate, okay? Strategy comes down to a personal setting. Strategy comes down to trading something that's not hindsight, okay? If you're trading a Flow, Joe, and Mo, okay, by the time you get the Flow, Joe, Mo alert, the thing is already up 10%. So how can you sustainably do that? Okay, if you're trading a RSI divergence, well, what if you see divergence, but somebody else doesn't see divergence? So, or if you're trading a moving average, well, what about the 200 moving average? What about the 50? What about the 100? So now what you want to do from a strategy perspective is use the most simple strategy that you can use, period. That's how you maintain consistency. So for me, I have daily triggers. Okay, one level long, one level short. That's decided the night before, the end. Okay, next we have the opening range breakout, first bar of the day. We take the breakout, the end. Okay, then the next strategy we have the Fibonacci. We take the pullback. Okay, here's your low, here's your high, here's your pullback, boom, and it's gone. So that's that's it. That's my way of doing it, right? So you can see here we have the Fibonacci bot that tells us it takes the same type of Fibonacci play every single day, which is a pullback. And that is what I want to say about strategy. If you feel like you're doing a strategy that is too much BS, basically multiple people are looking at it but interpreting it differently, that's not a good sign. All right. The other one that I like the most is the simple outside bar and inside bar. Here's the outside bar. You short below the low. Done. Here's your inside bar. Here's your nirvana. Done. Here's your holy grail. Done. Those are things that stand the test of time. They cannot be judgmental. It is what it is. It's an inside bar. It's an outside bar or not. Okay. Hit me with the 25 if that makes sense. All right. And I've done so many videos on strategy, guys. So you can always check out the channel for my strategy. You guys know I love Fibonacci. I do triggers and orbs. That's my holy grail. That's my triangle system. And I've been doing that for years. But I don't want to discourage you from trading whatever you want to trade. What I want to encourage you guys is two things. Do not average down unless you've been trading for a long time. Do the proper sizing. Track your trades. That's all I think can save so many traders. 90% of traders that blow up, if you follow those simple rule, guys, it can help. Okay. And I really wanted to do this. Forget about the trades, what's going on in the week, etc. I wanted to take some time to do this because I really feel that some people are struggling out there, and you can't come in one day and say, I'm going to hit it big today and I'm done. Okay. You can't do that. You have to have a system. All right. Thank you very much, my friends, for your time. I greatly appreciate you. I'm doing a 4th of July sale right now, and it's going to be for this week and going into next Wednesday. So just wanted to give you guys the heads up. If you're interested for the 4th of July sale, what I'm going to show you right now is, so I normally do my bundle package, right? You have all 3 books, 4 months in the room. You get my seminars, and you get full access to the Fibonacci bot, the 100 trade challenge Excel, and you have a one-on-one meeting with me for 30 minutes. I would love to meet with you guys after you've done 1 month of trading, or 10 trades, 15 trades, so I can sit down and talk to you about these things step by step if you want some coaching. All right. So normally this package costs $799 for 4 months and all the books and access to the seminars. It's a pretty good deal. And what I'm doing for the Memorial Day is I'm going to extend this from 4 months to 1 year. So I'm going to triple it, going to keep the same price. Or if you want, we can keep the same package, and I'm going to give it for 50% off. Okay. So instead of $800, guys, it's going to be $399. And you can just email me, rich@tradingwars.com, if you want the link for the deal, or you can purchase on the website if you want the full year. That's what I wanted to say, guys. I really hope this added value to you, and I'm looking forward to finishing the month strong. I plan to do a live stream on Friday, so please make sure to subscribe and hit the like button, and we'll trade live together on Friday. Thank you very much for your time, and I appreciate you guys greatly. Thank you. Take care.